Congratulations, everyone. You have successfully made it to day 4 of this Rich Off TICKS boot camp. So by now, I think it goes without saying, if you've been participating, commenting, studying along with us, you have committed to the path, to this endeavor, and 2026, or whatever year you happen to be watching this in the future, you have decided to see this thing through to the end. You have decided to learn properly instead of gambling your life savings away irresponsibly, and you've decided to prioritize knowledge and competency over instant dopamine and gratification. So if you have decided that, you are ahead of pretty much every trader out there that is in the 99% of traders losing. So you've already began to separate yourself. Now let's continue down the path. And I just wanted to take a moment to thank you guys too, because the support's been amazing. The show up rate has been amazing. You guys are DMing me questions. I'm interacting with you. I'm getting to really know you guys at a human to human level. And that's just been a blessing. So want to continue this thing. Let's keep it rolling. Let's keep it growing. And let's really get you rich off TICKS. Now, with that being said, we do have some very important foundations to lay today in terms of price action. So I'm not going to waste any more time. We're just going to go ahead and get straight into it. So today we're going to be talking a little bit about candlestick anatomy, right? We see candlesticks on the charts. We see them printing every day. But what actually is a candlestick? What does it consist of? We're going to dive into it in this lesson. Excuse me. Now, when you look at a candlestick in a basic context, we know there's a wick, there's a body, and then there's sometimes another wick. So in a standard candle, there's a wick on the top, wick on the bottom, body in the middle. Of course, there's some candles without wicks. Some candles only have one wick at the top or the bottom. Some candles have bigger wicks or bigger bodies than others. But in a foundational sense, every candle is doing this thing. Wicks and bodies. So that's the basic of candles. Now moving forward, diving a level deeper, within those wicks and bodies, we have highs, lows, and then we have open prices and close prices. So a bullish candle opens lower and closes higher. So you can see right here, we opened down here, we closed up here. Now, in between that time, let's say we're looking at a 1 minute candle. So by the time a minute starts and a minute ends, we find the high and the low. The highest point that candle went to, that will be the wick, and that is the high. And then the lowest point we went to is the low. And that part is the same with the bearish candle. The highest high, the lowest low we made in between that time will be the high and the low. The distinction between the bullish and the bearish candle is the bearish candle opens higher and closes lower. So you can see we opened up here and we closed down here. Simple enough. This is also the levels we mark on the daily time frame for analysis. We'll get more into that in a future video. But if you guys have seen me trade, I mark the open, high, lows, and close of the daily candle before I begin my trading. Now, within a candle, there is also this concept of the power of 3. And you may have heard this before, especially if you studied some ICT concepts, but the power of 3 is accumulation, manipulation, and distribution. Now, if you're confused right now, don't worry as we dive into the charts in future lessons, and even in this lesson, as we get more into market structure and price action, you will start to understand this concept much better. But all you have to understand right now, guys, is that this is how a candle is formed. So every candle, remember, price is fractal, like we learned yesterday, time and price. Price is fractal. So let's say this is a daily candle, guys. Within that daily candle, obviously there was a lot of 15-minute price action. There was a lot of 1 hour. There was a lot of 5-minute, 1-minute price action. But nonetheless, if we formed the daily candle, within that candle, there was accumulation, there was manipulation, and there was distribution. And this is very important to understand as it pertains to getting the best entries, riding the direction of price for that day, and also finding bias and direction. So how do we use power of 3 in a practical way? How do we define this? How do we relate this candle to this price? Well, we can see we have a low, open, high, and close, just like in every candle. Where did we open that day? We opened right here. Where's the open price on this candle? It's at that same level. Where's the low? we accumulated, we manipulated down to make the low. And the low is right here. You can see the daily candle opens up, goes lower, manipulates, and then pushes higher. Where do we push high? Up to here. Boom. Distribution. And then we get a slight retracement before the end of the day, and we close there with the wick on top. So when you're visualizing a candle, you'll start to get to the point where you can understand this on the lower time frame, and you'll understand based on where we're at within one of these three stages where you are at in the candle that's on the higher time frame. Very important to understand. This is a key concept. Make sure you're really studying this. Take a screenshot of this and make sure you kind of look over this information until it really makes sense. Now, how do we use that for entries exactly? So power 3 for entries, the fundamental thing we have to understand is the best buying opportunities come from the open price and below of a bullish candle. So let's say this is the daily candle again. If you were to buy anywhere in this day, where would be the best buy? Of course, it's at the low because we went higher that day. So you want the lowest price possible to capture the most of the move that you can. And that is from the open price and below. So when we're talking about power 3, we're trying to position in a bullish context below that open price so we can ride it all the way through the entire candle. And then on a bearish candle, vice versa, the best selling opportunities come from the open price and above on a bearish candle. So you can see we open up, make a high, boom, and then we go lower and close down here. So if you entered anywhere in this vicinity, you are very, very well placed for the day. And the last concept you have to understand is that bodies tell the story, wicks do the damage. So if you've heard the term price is respecting that level, price is reacting well to that level, price is disrespecting that level, a lot of traders, you've probably heard them say this. This is what they really mean. It's like wicks. You can see we wick down into this low right here, this liquidity level. This could have been a swing low point. And what do you see here? We respect it on close. The bodies are closing above that level, even though we wicked past that level. So that to me tells me that this level is currently being respected. Now, on the other hand, if we price down into that level and we close far beyond it, that tells me that we could potentially continue lower and that level isn't exactly that strong. Now, this also can happen in terms of fair value gaps, other PD arrays. We're going to go ahead and go over this further into the boot camp, so don't worry too much if you don't know what a fair value gap is. But you can see on this example, we wicked up and we ultimately ended up respecting that level and continuing lower. Whereas here, we make the same amount of move up, maybe just a little bit higher, except we close through the gap. So now it's more likely to go up. So wicks do the damage, bodies tell the story. Whenever you're trying to determine if a level is getting respected or not, don't look at the wicks, look at where the body closes. So if candle bodies are respecting the level on close, there's a high probability it will be respected regardless of wicks. However, if bodies are closing past a level or PDA, there is a high probability it will not hold. Now we're going to go ahead and open up the charts, and I'm going to go ahead and show you guys some power of 3. And let's use this daily candle as an example. So you see this daily candle right here, and we have, of course, a high, we have a low, open, close. Now, where would we want to enter on this candle? Well, we'd want to enter below the open price, and that is below the open price. So let's drop down to the 4-hour to see what we have here. So this is actually a perfect example. I did not realize it was going to be this perfect of an example, but it ended up being one. You could see, if you know, you know, this is a fair value gap on the bullish side on the 4-hour. We open up right here. You can see this is 6 p.m. That's when the new daily candle opens. Now, what do we do, guys? We manipulated down into that fair value gap. So where is the best place to buy on a bullish candle? That is below the open price. So anywhere down in this region, guys, that I'm highlighting right now would have been a very good, very ideal place to go ahead and place your buy orders. Let's just say I got in a buy right here on this fair value gap, stop below here, and I just decided to ride the majority of the daily move. And you can see there, guys, that's the best place to enter. So now that you understand that, the power of 3, let's go ahead and drop down to even lower time frames. And you can see there's just plenty of opportunities to get in. It reaches down here, goes up a little bit, reaches back down there. So it gives you 2 opportunities to buy below that open price. And of course, we're going to get more into nuances, guys, into how to line this up with your exact session, how to actually start to catch lower time frame entries with this. But for now, we're just understanding the basic anatomy of power of 3 and of how a candle forms and how you can use that info to position yourself advantageously. So I really hope you guys enjoyed this lesson. Go through your charts and start finding some examples of this, and also start to implement this into your trading if you're a little bit more advanced and you're already using some of these concepts that I discussed. Other than that, guys, truly appreciate you being here, spending your valuable time to learn, to grow, to just invest in yourself. So let's continue this journey. If you made it through day 4, comment day 4 down below, and also let me know what was the most valuable piece of this lesson, as well as if you have any questions. Day 4 complete. Comment down below, and I will see you all in day 5.